Welcome, everyone. My name is Russ Hightower, and I am presenting on the alternative minimum tax and its impact on the middle class. So let's start off with my abstract. In 1969, the Alternative Minimum Tax, or AMT, was created to prevent wealthy taxpayers from using loopholes that enabled them to pay little or no United States federal income tax. For many years, the Alternative Minimum Tax primarily affected the upper class income taxpayers, but in recent years, the tax has trickled down to the middle class. This research will look at the effect of the exemption amounts, recent tax legislation, and inflation, and how these items have resulted in a deviation from the original intent of the tax. So before we get bogged down in all the details about the alternative minimum tax, it is really important to understand the history of the tax. So in 1969, Secretary of the Treasury Joseph W. Barr testified before Congress stating that 155 individuals had incomes above $200,000 yet did not pay a dime in federal income tax. So at the time, many individuals did not understand how this was possible or even legal for that matter. The U.S. Supreme Court case Gregory versus Helvering raised a few questions about taxes. The case is concerned with the U.S. income tax law, and during the case, Justice Sutherland's opinion stated the legal right of a taxpayer to decrease the amount of what otherwise would be his taxes or altogether avoid them by means which the law permits cannot be doubted. So unlike the courts, the legislative and executive branches did not want individuals to have the option to avoid taxes, especially high-income taxpayers. At the time, the federal government was in need of more revenue to finance the war effort during the Vietnam War, which made Congress worry that if too many high-income taxpayers were avoiding taxes, there would be a significant reduction in tax collections. So, as a solution to this problem, Congress passed the Tax Reform Act of 1969, which included the first version of the alternative minimum tax. This act closed loopholes used by high-income earners and corporations. Additionally, the act also offered tax cuts for individuals and increased the tax exemptions for lower income groups. When the tax code becomes too complicated or unfair, the United States government will introduce new tax reforms. As a result, Congress enacted the Tax Reform Act of 1986, which introduced tax cuts and a simplified tax structure, substantially reducing money owed by high-income taxpayers. The structure of the AMT that we know today was a result of the Tax Reform Act of 1986. So for my foundations for research, I looked at a bunch of articles that dealt with the alternative minimum tax, the middle class, and the increases in the middle class and the increases in the alternative minimum tax. So in 1989, the number of taxpayers subject to the AMT began to increase. From 1989 through 2017, there was also an increase in the number of middle income taxpayers in the U.S. For many years, scholars have made predictions that the alternative minimum tax would introduce itself to middle income taxpayers. In 1999, David Lifson's testimony to the House Ways and Means Oversight Subcommittee indicated that many anecdotal examples show how middle-income taxpayers may be subject to the alternative minimum tax in the next several years, and that was way back in 1999. In 2003, Amy Feldman stated in her article titled "The Tax of Unintended Consequences" that in practice, however, the AMT has become the ticking time bomb of the tax code. The AMT now hits 2 million taxpayers and threatens 31 million more, roughly 1 in 3 by 2010. Among them will be millions of middle income and upper middle income taxpayers. So, what is the cause of the increase in taxpayers subject to the alternative minimum tax? Referring back to Amy Feldman, quote, "It's also more likely that you'll find yourself in AMT territory if you're upper middle class than if you're really rich. That's because the spread between the marginal tax rates under the regular tax system and the AMT rates are much wider for the rich than for the upper middle class, end quote. Additionally, one of the primary factors that led to the increase in the number of taxpayers subject to the AMT is that the exemption amounts were not adjusted for inflation until 2012. So, what did Congress do to reduce the number of individuals who pay the alternative minimum tax? In 2012, Congress enacted a series of temporary fixes to the AMT exemptions for individuals and married couples in an attempt to prevent some taxpayers from joining the ranks of the AMT taxpayers. Congress also passed H.R. 2012, which resulted in a permanent increase in the exemption in 2012 and provided for inflation adjustments in following years. So now we're going to talk about the AMT calculation. So calculating the AMT is not a simple task. Everything is different in the alternative minimum tax than in the regular tax system. Your taxable income, your deductions, your exemptions, even the way you calculate depreciation. For instance, the alternative minimum tax does not allow taxpayers to take a standard deduction or any personal exemptions, and does not allow any itemized deductions, including state and local income taxes, foreign tax credits, and employee business expenses. Let's put it this way. For the 2018 tax year, the only allowable deduction for the alternative minimum tax were medical expenses that exceeded 7.5% of the taxpayer's adjusted gross income, or AGI. The alternative minimum tax also includes income streams that the regular tax does not, including the fair market value of incentive stock options that were exercised but not sold, otherwise tax-exempt interest from private activity bonds, foreign tax credits, passive income and losses, and net operating loss deductions, all of which affect the taxpayer's alternative minimum taxable income. The table on the left represents the basics for calculating the alternative minimum tax. The process begins with the taxpayer's income amount from the IRS Form 1040. Next, the taxpayer's itemized deductions and exemptions are added back to taxable income because only a select few deductions are allowable under the alternative minimum tax. After the taxpayer's taxable income has been properly adjusted for, the result is the taxpayer's alternative minimum taxable income, or AMTI. Once the alternative minimum taxable income has been calculated, the taxpayer then subtracts the appropriate AMT exemption amount, which is based on their filing status, and the resulting number is the taxpayer's AMT income base. The AMT income base is then multiplied by the appropriate AMT rate, 26% or 28%. The 28% alternative minimum tax rate applies to taxpayers whose AMTI exceeds a specified amount, which is $197,900 for all taxpayers and $98,950 for married taxpayers filing separately in 2020. The 26% alternative minimum tax rate applies to all taxpayers subject to the AMT whose AMTI is less than the specified amount. Even though the AMT rates of 26 and 28% are lower than the highest marginal tax rate in the regular tax system, because of the way the alternate system operates, the effective tax rate under the AMT will usually be higher. So by multiplying the AMT income base by the AMT rate will give you the taxpayer's tentative alternative minimum tax, which is then reduced by the regular tax amount from Form 1040 and results in the taxpayer's alternative minimum tax. The taxpayer then will calculate both their AMT and their regular tax and take the higher of the two. So now we're going to talk about the alternative minimum tax and its effect on the middle class. So in recent years, the alternative minimum tax has pushed its way into the middle class. Referring back to the enactment of HR 2012, the act set the 2012 alternative minimum tax exemption to $50,600 or $78,750 for married taxpayers filing jointly, and indexed the exemption amount, the exemption phase-out threshold, and the future tax brackets for inflation. Because the alternative minimum tax exemption amounts were not adjusted for inflation, exemption amounts were much lower than they should have been. So when HR 2012 was enacted under the Obama administration, one of the immediate effects of was a reduction in taxpayers subject to the alternative minimum tax in 2013 by approximately 30 million taxpayers. So by setting the exemption amount higher than the previous years, and adjusting the exemption for inflation, many individuals who would have been affected by the AMT in 2012 were no longer affected in 2013. So HR 2012 was successful in reducing the number of taxpayers subject to the alternative minimum tax in 2013. However, the number of taxpayers subject to the alternative minimum tax began to increase again from 2014 through 2017, even though the alternative minimum tax income tax provision was made permanent. So right here, we're going to go into where I got the data for the number of taxpayers subject to the AMT. The data used to calculate the number of taxpayers subject to the alternative minimum tax came from the Tax Policy Center and the Internal Revenue Service. So data from the Tax Policy Center came from an article by Greg Learserson and Jeffrey Rowley. And the article discusses the individual alternative minimum tax historical data and projections from 1970 through 2018. However, the historical data only applies to years 1970 through 2008 because the last time the article was revised was the end of the year of 2008. So that's where I had to go into the Internal Revenue Service SOI tax statistics for individual income tax returns. So there, I got the data from 2009 through 2012, through 2011, which represent estimates based on a sample of individual income tax returns filed between January and December of a given processing year. So that is considered complete year data. The data from 2012 through 2018 represent estimates of income and tax items based on a sample of individual income tax returns filed between January and late September of a given processing year. So that is considered to be preliminary year data. Sorry about that. So looking back at this graph, and the 2014 through 2017 increase, the reason for this increase was because several tax breaks expired at the end of 2013, including the higher education tuition deduction, the healthcare coverage tax credit, tax credits for energy efficient homes, and the mortgage debt exclusion. So as a result, the expiration of many deductions and credits, the number of taxpayers subject to the alternative minimum tax began to increase again in 2014. So now we're going to go into more detail about the Tax Cuts and Jobs Act of 2017. So in 2017, the number of taxpayers subject to the alternative minimum tax reached 5,044,436 individuals and decreased to approximately 20,000 individuals in 2018. The Trump administration's Tax Cuts and Jobs Act of 2017 increased the exemption amount and phase-out amount for each filing status, which is shown in the table above. The exemption and phase-out amounts extend through 2025, as you can see, and the if you look at the phase-out amounts for 2017 and 2018 through 2025, they more than triple, which really aided in the reduction of the number of taxpayers subject to the alternative minimum tax in 2018, and will continue to help that number to stay low through 2025. Observe the significant increases in the exemption amounts. So the 2017 exemption amount all increased progressively. I mean, just they all increased progressively year to year, and will stand still from 2019 to 2025 unless the president decides or feels the need to increase those exemptions even further. So the increases are the main reason for the significant reduction in the number of taxpayers subject to the AMT in 2018 once again. So the alternative minimum tax exemption. What is the alternative minimum tax exemption? So this is the allowable amount an individual taxpayer may deduct from their alternative minimum taxable income before the AMT liability calculation is made. Individuals that are subject to the AMT have a higher tax liability resulting from the AMT calculation than the regular 1040 calculation. Now remember that the AMT exemption amounts were not adjusted for inflation until the enactment of HRA 2012. So what I did was adjust the exemption amounts for inflation from starting in 1970 all the way through 2019. This shows us a projection of where the AMT exemption amounts should have been if the AMT was originally adjusted for inflation in 1979. To adjust the exemption amounts for inflation, I looked at Form 6251 for tax years 1979 through 2019 on the IRS website and used the amounts found on the form for each filing status. And the table to the left shows the years that the Form 6251 did not change and the changes where you could find the exemption amounts on each line. And the reason why I had to start at 1979 instead of 1969 when the tax was originally enacted, the IRS only provided data, or the Form 6251, starting in 1979. So after collecting all the data, putting it in an Excel worksheet, I had to go to the Federal Reserve Economic Data website, or FRED, to get the Consumer Price Index for all urban consumers, all items in U.S. cities, and U.S. city average data set. So I then used this equation that is seen on the screen. I took the exemption amount and multiplied it by the later CPI, or Consumer Price Index, over the earlier CPI to get the inflation adjusted exemption amount. And all the data set from the IRS was seasonally adjusted and indexed for 1982 to 1984 prices. So the AMT exemption from 1979 to 2019. This graph illustrates the AMT exemption for taxpayers filing single and head of household, married filing jointly, and married filing separately from 1979 to 2019, and how the amounts have increased over time. The orange line represents taxpayers married filing jointly. The blue line represents taxpayers filing single and head of household, and the gray line represents taxpayers married filing separately. Note that the graph shows the actual exemption amounts for the alternative minimum tax that have been used from 1979 to 2019. Prior to 2006, the alternative minimum tax exemption was not often subject to change. For instance, between 1979 and 2005, the alternative minimum tax exemption increased only 4 times from the 1979 exemption amount of $20,000. Between 2006 and 2012, the exemption amounts increased more frequently from year to year. In 2012, the exemption began to increase every year to account for inflation. So the purpose of this graph is to show how the alternative minimum tax exemption amounts for each filing status has changed since 1979. This graph illustrates the inflation-adjusted AMT exemptions for single and head of household taxpayers from 1979 to 2019. The blue line represents the actual exemption amount for taxpayers filing single and head of household. Notice the orange line representing the inflation-adjusted exemptions for single and head of household increases more progressively because each exemption amount was adjusted for inflation beginning in 1979. Additionally, the blue line was not adjusted for inflation until 2012. If the AMT exemptions were adjusted for inflation, the 2019 exemption amount for taxpayers filing single and head of household would be $252,554.26. $252,554.26. However, since the blue line was not adjusted for inflation until 2012, the actual exemption amount for a single and head of household was $71,700 in 2019. The significant difference in the exemption amounts is one of the main reasons the number of taxpayers subject to the alternative minimum tax has risen over time. This graph represents the inflation-adjusted AMT exemptions for married taxpayers filing jointly from 1979 to 2019. The orange line represents the projected inflation-adjusted exemptions for the alternative minimum tax. The inflation-adjusted exemptions for married filing jointly resulted in the exemption amounts increasing more aggressively than the actual exemption amounts represented by the blue line, which are married taxpayers filing jointly, and the actual AMT exemption amount that we see today. In 2019, the actual exemption amount was $111,700 compared to the inflation-adjusted exemption amount of $393,435.23. Again, the significant difference in the exemption amounts is one of the main reasons the number of taxpayers subject to the alternative minimum tax has increased over time. This graph depicts the inflation-adjusted alternative minimum tax exemptions for married taxpayers filing separately from 1979 to 2019. The blue line represents taxpayers married filing separately and the actual exemption amount that we see today. The orange line represents the projected inflation-adjusted exemptions for taxpayers married filing separately. In 2019, the blue line showed that the actual AMT exemption amount for taxpayers married filing separately was $55,850. If the exemption amounts had been adjusted for inflation starting in 1979, the exemption amount for the married taxpayers filing separately should be $196,717.61. Observe how the orange line increases more progressively than the blue line. In reference to the inflation-adjusted exemption, as the gap between the orange and blue line gets wider, the taxpayers subject to the alternative minimum tax increases, with the blue line being your base because that's the actual exemption amounts that we see today. So if the alternative minimum tax exemption amounts were originally adjusted for inflation in 1979, the number of taxpayers subject to the alternative minimum tax would be significantly lower. So here is my conclusion. After researching and analyzing the data I gathered on the alternative minimum tax, I found there to be a significant increase in taxpayers subject to the alternative minimum tax from 1979 through 2017. The calculations of the projected inflation-adjusted exemption is significant because it shows where the AMT exemptions should be today. With the new information and proper tax legislation, government officials could slowly incorporate the projected exemption amounts into the U.S. tax system and further reduce the number of taxpayers subject to the AMT in the future. So if this change was enacted, the number of taxpayers, like I said, the number of middle class taxpayers subject to the AMT would significantly decrease or possibly disappear. Further research could project how many taxpayers will be subject to the alternative minimum tax at the expiration of the Taxpayers, Tax Cuts and Jobs Act provisions in 2025. If there are any questions and comments, please feel free to email me. Thank you. And here is my